Alright, what's up everyone, and you are watching What's Up Ryan, and today we're going to be covering investment strategies that I use that have helped me to really build my portfolio over time. It doesn't matter what asset class you are looking at the moment. Either you're looking at stocks, either you're looking at a property, whether you're looking at crypto. Honestly, this strategy, right, works in various cases, and I think it depends entirely on your it depends entirely on a few things that I will be covering in depth today in this episode. So if you are someone who has not built a portfolio yet, or you don't really know what a portfolio exactly it is, or what a portfolio is, I think this episode is you're going to find it very useful, because when you create a portfolio, there is an investment objective. So for example, you would like to build a passive income in this portfolio. So your most of the selections of what you do, or what kind of asset classes that you decide to pick, have to revolve I'm not sure why is it not playing back, guys. Give me a second, let me restart the stream. Alright, what's up everyone? So you are watching What's Up Ryan, and just now we were having a little bit of technical difficulties. My stream was not playing, so I'm not sure whether I lost you guys. Anyway, I'm going to repeat myself. In today's episode, we're going to be talking about focused investing or diversified investing. So what is the key differences? Why do you do it? When do you do it? And obviously, I think everybody wants to know which strategy works the best. So watch till the end, because you're gonna find out which one is gonna be the most suitable for you. I'm gonna be sharing about why I prefer using focus compared to diversified, but most people prefer the diversified approach because it's just a little bit easier to manage. I'm not saying that it's easy either way. Both strategies work in different circumstances and depending on your financial objective. So let me cover a few things first, and then you're going to be able to start creating your portfolio depending on which method you intend to use. Now take note that whenever you use a focused investment strategy, you need to bear in mind that you are definitely going to be needing a few requirements. So let me cover the requisites first. So one, if you're intending to look at focused investing, right? Okay, so let's say you're using it from focused investing strategy. Firstly, if you're looking at it from a focused investment strategy, you make sure that you already have existing income streams. Okay, so it's very important to establish this. Okay, so your existing income stream must have already been established prior to you intending to use this strategy, because you don't want to, it's very difficult to justify a particular investment, especially depending on which stage it is at. If let's say you are able to guys, I'm not sure whether you can see me, because right now it seems like there seems to be an error playback, and I'm not sure what's going on. Can someone type in the chat so that I can see whether, okay, it seems alright. Okay, so if you all can type in the chat, it would be good to know whether you can see the stream or not, because from my playback it just went dead. So okay, alright, so yes, as I was saying, I think existing income is very important, because if you decide to take the path of the focused investment strategy, right, you're going to consolidate your funds, or at least stay invested in these particular asset classes for a good period of time until you meet your objective, right? So this is one thing that has to be established first. So your existing income obviously comes from your job. It comes from maybe existingly you have a rental property that is giving you a certain amount of passive income, or you existingly have a portfolio of stocks that are giving you a nice solid dividend. Okay, so two, you are looking at building passive income. Okay, this is one. Okay, the other one is you're looking at the growth of a company. Okay, that means the growth. Oh shucks. Okay, so growth of a company is very, very important, right? Because if you don't if you don't believe in the company, right, you will not choose to stay invested. Okay, it's just very, very simple. You will only be thinking about trading it. You're not interested in staying invested. And growing companies, you require an X amount of time. It's not something that you could do overnight. It doesn't happen in a few weeks. It's a number of years. So bear in mind, you need to already have decided which company do you want to put your money in, and make sure that you're going to stay invested and grow with the company. Okay, so now number 4, okay, you are familiar, okay, yes, you are familiar, okay, you are very familiar with the sector that the company is in. Okay, if you are not familiar with the sector that the company is in, I highly suggest that you do not touch it. Okay, because this is the part where whether you're in stocks or in crypto, right, if you don't even understand what the business does, I think you should not even, like, you don't even have a vivid idea. I think it's very important that I stress this. It's not, a lot of people, right, just like to throw money at things that move. Okay, and it should not be the case. You should only be willing to part with your money, and whatever gains that you get in the short term, right, is a bonus. What you actually want is, that this industry, for example, is let's say it's a $10 billion industry, it's a $20 billion industry. There is high demand. Okay, it may be in nanotech, it can be in it can be in AI, it can be in machine learning. It depends. Okay, it depends on what is your forte of expertise that you are familiar in at the moment. Now, if you're not, what if I'm not familiar? What if I'm from arts, for example? Then, but I have an interest in tech, or I'm interested in trading. Sure, that's okay, because at least if you have an interest, you would have already read in depth about that particular industry for you to venture into a particular investment. Because maybe sometimes what you're working on, or what you're a professional in, doesn't kind of allow you to find these kind of financial opportunities. And obviously you need to be familiar with these companies before you even step in. Even if you don't understand how to read an audited financial statement, the very least you should understand how are they making money. Okay, I think that's the basic that you should at least do before you even invest in anything. Okay, so obviously just understand how do they make money, what is their business model, who are their customers, is it B2B, is it B2C? When I say B2B, means business to business, or is it the business to the customer, right? So you have to just quickly identify this. Okay, and the fifth and final point which I want to highlight is make sure that you are already you are someone who you're not just familiar, right, but you are someone who you are already looking at the overall objective of your portfolio. Okay, the objective of your portfolio is very, very important, because when you don't have the objective in mind, okay, and by the way, whatever I'm teaching you now, right, is part of our masterclass, and our masterclass is taught live in Singapore, because I feel that all these things are vital for anyone's interest in the investing space, right? If you want to be an investor, I think it's very, very important that you know and understand all these things so you can go out there and have the skills to execute. So anyway, objective is just very important, right? When you have an objective, when you've built your portfolio already, you need to identify. Okay, so you have either you're building a passive income objective, and your objective usually means a financial goal. At the end of the day, you're here to make money, and this portfolio should help you to do that. Okay, it should help you to do that. So once you have determined all this, okay, let's go to the part where we're going to talk about the information available. Okay, we're going to talk about certain things that I want to cover as well. So let's very quickly go to that. Okay, all right. Okay, so now if you look at it, right? Okay, so information wise, how do I know if I'm taking a focus if I'm taking a focus investment approach, okay, if I'm taking a focus investment approach, how am I going to identify the projects that I want to stay focused in? Obviously, the very first thing is how much of the company how much information, okay, is available about the company. Okay, this is very vital. Okay, so information can come in two forms, right? One is public, and the other is private. Okay, and usually private information is the most valuable, but it doesn't mean that it's the only way to get the information that you want. Sometimes public information is available, but it is not. It is all over the place, that you have to have the experience and knowledge in order for you to decipher the information, right, and piece everything together. So public information can come anything from a financial statement to a white paper to certain news announcements, progress and development announcements, and of course if there are any partnership announcements, all these things, right? And how much is, and also if there are numbers involved, even better. But this space, especially if you're talking about in the crypto space, it's very difficult to have everything in place. That is why it is not the easiest place to get your information. Unlike the stock market, right, where it's very mature, and usually listed companies have to reveal who have they invested in and how much they invested in. You see, where when you compare that to the crypto space, you are not able to just immediately release. You don't even have to release information at times. It just depends on how transparent the company wants to be. So this is the problem in crypto first. Okay, so second, okay, I think it depends on your market. I think it depends on your knowledge, right? So knowledge is something that you have to build over time. A lot of people still don't understand what the blockchain is all about. Why bother to even have a blockchain? And then why even bother about the functionalities of a blockchain? I think if you don't even understand this, right, it's very difficult for you to be in this space, because you're definitely just here because everybody else is here, and that is one of the most dangerous things. You cannot be here just because everyone else is putting money into this space. That's just basically blind leading the blind. And the reason why I even started the channel was because I saw many people doing this, and they were jumping in head first and eyes closed. That is what they've been doing, and a lot of people have lost money because they were clearly not committed, and they were not committed to knowing what they needed to know, and they didn't even care about a lot of things. They didn't care about why this company was established, what's the company's business model, what kind of problem this company is trying to solve, and at the same time, who are the clients of this company? A lot of people don't even think on this level. Okay, they are just simply, okay, I see this this particular cryptocurrency is doing say 30% today. It seems like it's going up. I want to buy and hope for the best. Okay, that's how people approach it. After many episodes and after many years in the space, okay, this is my 3rd year in the space, I realized that people in our group at least bothered to start reading the white paper and asking the right questions. This is something that I take a lot of pride in, because most of the time people come into my group are expecting very straightforward answers from either the admin or the community. And I always ask them, why are you asking a question like, what should I buy today? That's just like asking, hey, today the sun is shining. Do you find that it's hot? It's a stupid question, because obviously when the sun is shining, it's usually hot, right? And you want to ask intelligent questions when you are coming into a more advanced group, and this is really a very advanced space, because right now the space is still developing and no one wants to answer you if you lack the basic understanding of this space. So that's why I'm emphasizing this quite a number of times right now. Okay, so once you have identified the knowledge, right, I think it boils down to your after you have acquired the knowledge, right, then it looks at understanding. You have to understand. You need to monitor, and last but not least, you need to put a value. Okay, so after you attain the knowledge already, right, you definitely want to understand how this space is functioning. And okay, once you start understanding how the space functions, you can piece everything together. Like when this company says that, oh, okay, I'm going to start some kind of blockchain related solution that is going to improve the payment system, or the reason why I'm creating this particular DLT or distributed ledger solution, because this industry at the moment, for example, maybe the accounting and finance industry is lacking in transparency, or its processes are very slow. It needs to be automated. You see, that way you start realizing, oh, okay, so blockchain can be used as a data silo. Blockchain can be used as a consensus mechanism, right? Because you don't want collusion, you don't want inaccuracy of information. You need to be able to validate it in some way, and at the same time, maybe you do not want the information to be removed as and when you please, right? Because usually when you put something on the blockchain, it's immutable. That means you can't remove it, right? If you're talking about a proper chain, right? But these days, I think there are both permissionless, private and public. So private chains tend to have more flexibility because the company still wants to have a certain level of control. If they fuck up, they make a mistake, they still are able to change certain things on the data that is placed on the blockchain. So that is kind of what they want. Sometimes they want to compromise, sometimes speed versus security. If I want to be more secure, I tend to have slower block times, and at the same time it takes a little bit longer for my data to be processed. But if I kind of tweak and compromise that, I can have speed, but maybe security wise I cannot have as much compared to, say, the Bitcoin blockchain, stuff like that. You need to be able to at least identify these things. Now, also take note that when you're talking about blockchain, it is a protocol. Okay, that means it sits on top of an existing infrastructure. It can be its own infrastructure, but usually because the blockchain, if you're talking about a proper blockchain, it is very, very slow. So that's why you need a lot of either people staking it, or you have people actually mining and creating new blocks. That's just how the blockchain program works. All right, it's a dedication of lots of computational power and electricity. Hence, right now a lot of companies are switching to proof of stake because it's just less power intensive, right? But it still serves the same function. Whether or not it is more secure than the proof of work consensus, nobody actually knows. You require more time, because the proof of stake concept, I think, came out only when Ethereum decided to change it. And of course, right now there are companies that are already on proof of stake. For example, like Quantum. I think you have Quantum. You have I think Ripple may be also a proof of stake. I'm not very sure. Right now there are quite a number of companies. There are too many, guys. There's 2,100 cryptocurrencies out there, and majority are all having different consensus algorithms or delegated proof of staking, as they say. So plenty, like I said, you just have to focus and see which one works for you. Now, monitoring. So monitoring is very straightforward. If you have too many cryptocurrencies in your portfolio, how are you going to monitor all? Can you monitor 50 cryptocurrencies? Can you monitor 100 cryptocurrencies? Are you a robot, right? If you're not, obviously you would want to keep it to less than how many you can monitor. Now, maybe you're someone who is just very good at segregating information and remembering information because you're someone who can do that. But for me, I like to only stick to 5 cryptocurrencies and no more than that. Because anything more than 5, I cannot remember. I will not bother to even take the time to go and understand and how are they progressing. I want to be able to stay connected to them, right? And when I say 5, because I am able to assess information and they are also willing to be transparent about the information. At the same time, because of the channel, I'm also able to contact people rather easily and attain information that I require. Now, this is not private information. It's just more of being able to ask them questions. And that is the beauty, right? Even you can do that. If you are part of a Telegram group or crypto community, do you realize that you can go into that community and ask questions? At the same time, these people, these management teams are nowadays available on LinkedIn. You may or may not be able to message them, but at least if they are willing to answer your questions, that will just help you out so much, right? Okay, and the last but not least, putting a value. This is the part that is the most difficult. Unfortunately, a lot of cryptocurrencies these days, you cannot put a value to it. Why? They do not have a transparent financial statement that is open to public, and based on the tokens, it doesn't apply, because whatever financial statement that they put out there is only applicable to shareholders. That means if you are a shareholder of the Litecoin, let's say Litecoin, when Litecoin started, they did issue shares, all right, when they started the company, and I'm pretty sure that they did, because when you start a company, naturally you will have shares. You're either the sole director or you have a number of partners who are managing partners as well, and they are directors of the company, okay? And that financial statement belongs to that realm. Now, but there are cryptocurrencies that have exceptions, that have provided and are willing to share a piece of the revenue or profit with its token holders, okay? So there are a number of cryptocurrencies that have successfully done that. Now that it's obviously is the exchanges, which is like Binance and Huobi, okay? Binance and Huobi both are having revenue, and these days exchanges are the only ones that have revenue. Hence, I keep repeating, because I want to be able to have something sustainable to talk about. It's not that I'm shilling exchanges, but it is an actual fact. If you go to the actual stock market and you pick any listed company, McDonald's, Amazon, Google, you talk about Microsoft, everyone has a product. Either it's a software product, either is a actual physical product, it's a food and beverage or whatever, okay? And all these things are being consumed. Okay, they're all being consumed either as by enterprises or by customers. Right now in the crypto space, tell me which other companies that are being consumed by the customer on a consistent basis. Right now, only BAT just turned on its monetization, which is where whenever you view an ad, if you decide to view an ad, you'll be paid in BAT tokens. Only recently, because they built a 20 million user base, where obviously it's 20 million people have already downloaded the BAT browser, from what I assume. But how many people are actually using the BAT browser on a consistent basis, and how many are actually using it to watch ads? Nobody likes to really watch ads, but at least they decided to monetize the system after building a user base. So that's kudos to them, and that is why right now I think Coinbase has already listed them, and they've been getting quite a bit of traction. So I'm giving you examples, guys. So this is what I mean by putting a value, because if you cannot put a value, or at least put a number in your head, it's very difficult. You're just you're just it's a guesstimation. Now, so now I'm going to give you some examples, okay, of what a financial statement looks like. And this is what a financial statement looks like. And this is from the Litecoin Foundation. So the Litecoin Foundation, as we all know, is of course run by Charlie Lee, and you know, if you look at it, right, it is quite a number of key things that you need to take note of. So there's the total income, there's the intangible assets, there's also the total assets, okay, existing liabilities, okay, you're talking about salaries payable, which is not a lot. You see, if you think about it, that means the Litecoin Foundation, right, is a very, very small company at the moment. If you see the salaries that are payable is only 16,000, that means it's a small company. All right. Then if you look at the total investment, right? Total investment is at 2.8 million. This is of course based on 2018, right? It could change over time. And right now, because of the devaluation, I think also the cost of sales, there's a loss in terms of income. There's not much income, or there was a loss of income in the 3 months that ended. And right now, the whole idea is at least there's a financial statement, but this is unaudited. Okay, this is done by their internal or at least an engaged third-party accounts. Right now, let me just share with you. Okay, like what Huobi is doing. So Huobi is trying to make the whole process more transparent, right? And that's why they launched a project center. And this project center basically just means that if you are a company that is on their block and you are a blockchain project and you have launched on the Huobi project center, right, you need to put in certain things. For example, I think what's most important is putting in, like, say for example, your project introduction information, videos, pictures or articles or whatever, your project activity information, if you have even any kind of accounting that or any records that you like to put up there, all these things, right, can be placed on the page, right? And when you place it on the page, it's easier for me as an investor to go and take a look at your project, because if you're not willing to be transparent with me, why the heck should I be investing with you? And this is one painful thing that most of the masses I find is very unfair, because if you're raising money from the public, right, say even 10% of your tokens that are going to be dedicated to the public, and you're not putting up enough information and everything is so fucking secret, right? Like, oh, this VC is going to be in and this VC says so. Fuck that. Because if that is the case, right, you shouldn't even be touching the investment. Okay, this is one problem, and this is the part where I hate the most, and I'm going to break this whole space down by actually developing something that is going to be highly transparent. And this is the part where, because I still believe in social inclusion, despite the fact that a lot of the space still requires a lot of information, a lot of educating. This space requires a lot of education, and a lot of youngsters are coming in with, look, the young, honestly, you can take a hit. I'll be very honest with you. This is not financial advice or whatever, but the young can take a hit. But people who have saved up a good amount of, who have saved up money for a good amount of time, right? They are getting, because of the fact of the matter, people are greedy, and when people see huge gains to be made, right, and their money is sitting in the bank account doing nothing, and at the same time they are not able to have access to a financial advisor because perhaps they are not of that particular high net worth where a financial advisor will be dedicated to them by the bank, right? They are not able to attain the information and knowledge that they need to make a well-informed financial decision to invest. It doesn't matter what asset class. I'm just talking in general. And people have to come to YouTube to kind of find the information. And you know how detrimental and risky that is? Because if this person is just purely about entertainment, okay, and they are just talking about it just because they feel, and it's non-financial advice, and it just makes it okay that they put the disclaimer on the video, and people tend to follow other people, okay? One, people are lazy. Okay, when people are lazy, they prefer, you know what, Ryan, tell me what to do. And you know what? I will always tell the person, why don't you look at the courses available? That's why we put up the tools and information for you. It's all free. If you are willing to put in the money, why aren't you willing to put in the time? So you say, I don't have the time, Ryan. I want to quickly understand this space. Great, then come to the masterclass. You see? there's no excuse for you to not want to know. And you know what? If you are mature enough, to know what is available out there, and you are savvy enough, you don't even need to watch YouTube, because you are already knowledgeable, you have the skill sets to make your own decision. You see? So you won't even come into my Telegram group and asking me questions, because you already know how, right? You already know how, right? And you are already making money on your own. So when you are already at that stage, right, and you are able to surpass my level of knowledge and analysis, you're on your own. That's the whole idea of masterclass. That's the whole idea of why we even created the free courses on Udemy. That's why we even created CG Protégé, because we want to give people the opportunity to learn. And you have no excuse, because we created so much learning resources from our 170,000 hours dedicated to this space, and at the same time dedicated to finance in general. There's no excuse, guys. There's seriously no excuse that you can give me that I would divulge the information until I know exactly what you want to know. You see, this is the problem. Transparency, and at the same time, your willingness to learn. So that being said, right, if you are already interested in this space and you plan to approach this, right, with a focused investment approach, right, I'm going to recap this one more time. Make sure that you already have existing streams of income. The worst thing about a focused investment strategy is that you put your money into this particular investment or investments, and then after that, what happens is that you're going to get owned, because if the investment or whole industry goes down, or the sector goes down, you're going to have your investments stuck. Not only are they're going to be stuck, they are not, and it could even collapse, and you could lose all your money because you were just unfortunate, or the industry itself just wasn't mature enough. So you can approach it in two ways. If you want to be focused, make sure that the company is mature. We're talking about more than 5 years, even 10 years if possible, and they have already established themselves as a key market player. Like, it's very hard for them to be toppled. That's one way, right? That's the conservative way. The other way is that if you're a little bit more on the aggressive side and you already identified your risk profile, and you are looking at this space and you say that, hey, this space is still way too young, but I know that this company is doing certain things. Where is the information? Where are you getting that information from? And if you are able to put the pieces of information together and form an analysis, right, that this is a viable investment for you to go in hard, then you can do that, right? The next thing is the company growing over time? Right, over time, as the sector matures, whatever whatever it's doing, right, matures over time, and you can confidently say, hey, this token is going up in price, and not only that, it's not dropping drastically like 80-90%. That just goes to show that it is doing something right. Okay, that means it genuinely has a strong community support, and that is what you want. Right? Because if you're going to be focused, you don't want to be in the situation where, wow, this thing just drops drastically, and then after that, there's no way it seems to be recovering. And even if it does drop drastically, as because crypto, right, unfortunately drops drastically because of Bitcoin, and Bitcoin is just highly volatile. But I noticed that there are a lot of cryptocurrency projects these days that are linking themselves up to a stable coin, and that provides them an additional life support, or at least a safety net. In the event that, let's say, Bitcoin does something stupid, they can just build it back up, or at least support it with the actual revenue that is coming in from their company or their war chest. This is something that's very important. Now, obviously, when it's on the secondary market, they don't have to do that because it's already based on the secondary market. Whatever that is trading on the secondary market right now, that means when you're trading it, it is based on, it is out of their control. Companies cannot control what happens on the secondary market. Well, they can, but they would choose not to, because they'd rather dedicate their resources, revenue, to hiring talent and building businesses and expanding. This is what the money should be for, and not market making, right? So this is something that's very important that you need to understand. So the next thing, if you're looking at a diversified portfolio, what should you do? Okay, so let's go into that. So diversified portfolio, okay, is another approach altogether. So let me just erase let me just erase this first. So that's for focus. Okay. So now for a diversified portfolio, right? Okay, so this is diversified. Okay. Diversified usually means it's across multiple asset classes, okay? That's what it means. Asset classes. Oops. Or, okay, it's either across multiple asset classes or it's across a single asset class but many companies, right? Many companies or many cryptos, whatever you want to call it. Companies or shucks. Okay. And you're gonna have a few perimeters that you want, okay? You want to set up some perimeters. Okay, so what are the perimeters? For example, any cryptocurrency that gives me 5% per annum. Okay, so you're gonna probably have to sift out whatever cryptocurrency that gives you 5% per annum, and that's going to be part of your portfolio. The next thing you want to have is how long have they been paying at 5% per annum. So let's say, okay, this space, I only want to pick any company that is 2 years and above. Okay, any company that's 2 years above, that's also part of your criteria. The next thing is you want to pick is, are they available on Ledger? Okay, let's say for example you set another criteria where, okay, all these cryptocurrencies that I plan to stake in have availability to put on the Ledger. Okay, so then you have this bunch of cryptocurrencies. So you're gradually filtering, and you're not really thinking too much about the fundamentals so in depth. Okay, of course, obviously you need to have a certain level of understanding of the fundamentals, but it's not as in-depth as focus investing. Okay, so you kind of put a certain level of, and the next thing you can have is, for example, maybe I want it to have a more than 50 million market cap. At the same time, day-to-day volume must be above 100,000. So that way you don't get unnecessary scares. The more filters and layers you put, the better your portfolio can potentially become. Now, because it's up to you how strict you want it to be. You can even, for example, put in based on the volatility, the day-to-day volatility, where okay, I don't want this cryptocurrency should not fall more than 50%, right? The moment it falls more than 50%, this particular cryptocurrency is out of my portfolio, for example, right? So these are things that you can preset if you decide to do so. Now, everything unfortunately at this point is all done manually, and this is something that you can do for yourself in a diversified portfolio. And same thing, a diversified portfolio should also have objectives, whether is it for passive income or growth, and have a final financial objective in mind. What's the purpose of this diversified portfolio? Is it to supplement my existing stock portfolio? Am I someone who is interested in the space, and I want to see which one is going to give me that next 10x, 100x or whatever, or 1000x gain, but I don't know which one, and I want to put small amounts across a number. Say I want to put 20 to 50 cryptocurrencies. That's fine. Okay, that is fine as well. That approach can work, and same thing, it boils down to the same thing. I would still emphasize that you understand your risk profile and identify your risk profile, and then after that go and make sure you set aside a certain amount of money. Streams of income must never come directly from an investment yet, especially if it's new and it's unestablished. If you have already been in the stock market for say for five years and above, and this particular portfolio of yours has been giving you a dividend income that is half your basic salary or even covering your full basic salary, there is no issue, because your existing liabilities is either taken care of by this portfolio, or it's even taken care of by your job, that whatever dividend income that comes in from your portfolio, it doesn't matter. Paper gain is not actual gain until you have realized the profit. Please take note, okay? Whenever people tend to get very, very confused, if you are not taking money out of the market and putting it into your pocket or bank account, it doesn't count. Okay, it doesn't count, because everything is just paper profit. You must make sure that you realize your gains. And when you do take out money from the market, Where is it going to go? Is it going to stay in cash? Is it going to go to another property? Is it going to go to your business? Everything must have a cycle, and fully utilizing your money flow, your cash flow must always be positive. If your cash flow is not positive, don't think about diversifying into anything else, because you need to sort this out first. Now that is an entirely different episode, but I'm just giving you the gist of it. So a diversified portfolio, simple. Usually you want to put yourself across more options. Either it's in more asset classes, or if you're looking at crypto alone, across more coins. But when you say more coins, it's not just about this person stating that this is good. This person has claimed that this is good. Ignore what all these people are saying. Try to understand the strategy behind it. Okay? Understand whether or not diversified strategy works for you. Maybe you're someone who is still very young to the space, very new. You want to be a bit more experimental. A diversified approach is definitely better, because it forces you to say, okay, I'm going to put $50, $100 into this particular token, and I because I'm monetarily invested, I have some skin in the game, as they say. I will definitely take more time to go and learn, because sometimes people have to learn because they put in money. And that is why naturally we obviously want to emphasize that when you have skin in the game, right, you will definitely want to you definitely are going to learn. You want to learn about that particular project, that particular company, because you have skin in the game. It doesn't make sense that you throw money and then you base it on someone else's opinion. It's very, very risky, guys. Just because your best friend that you've known for 20 years is invested in something, you can listen to him, because if he's credible enough and he's proven himself over time that he's a solid investor, naturally your gut can be down by a little bit. But it doesn't save you, it doesn't give you an excuse to put in your whole life savings just because your friend did so. Right? Just because Tom made $1 million from crypto, and Tom is a banker, Tom is someone who has 5 houses, okay, and at the same time he's my best friend, I definitely will listen to Tom, sure. But are you like Tom that has 5 houses and he's a banker that pulls in a 7-figure salary every year? Are you like Tom? If you're not like Tom and you're just maybe perhaps bringing in a 5 to even low 6-figure salary, and you only have one home that you still have a mortgage on, do you think that you can invest like Tom? No, you cannot, because your financial situation is very different from his financial situation. So by having a diversified approach would be perhaps a little bit better, because then you are able to kind of experiment, be a little bit more experimental, and you're able to place into various cryptocurrencies until you kind of understand how each sector works and which one is viable and suitable for you. Okay, it's all about you, guys. Okay, when you step into this space, right, and you fail to even watch the right information, okay, that's what I'm very concerned, because right now the market is starting to pick up, and let me tell you this, the market is picking up. The volume in altcoins now has been coming in. We just made, no joke, collectively 70% profits in total in just 2 weeks. Okay, 70% profits. It doesn't matter about the amount. It's 70% profits. We have not seen that for quite a while, because the volume is being shifted from Bitcoin and into the altcoins at the moment. And if until now you still are clueless, I highly suggest that you click in my links in the description below and start getting yourself educated. Because if you don't start getting yourself educated and you just want to be lazy and jump from one signal group to another signal group and just loiter around in free forums expecting information, that's okay, because maybe you have time. I don't have the time. I only have time to educate people anywhere from 30 minutes to an hour a day, and I'm off and I'm busy talking to VCs. I'm busy looking at the other businesses in this space that I want to invest in. And at the same time, if you're someone who's interested, maybe perhaps the CG Protégé group could be for you. And at the same time, within CG Protégé, there's CG Protégé Pro, where we focus on giving you the top level information of what we have discovered to you. Okay, so if that is all that we have, guys. Like I said, this is one part of the masterclass. Obviously, it is more in depth. I cannot cover everything today because or else the video will be extremely long. It's already 45 minutes and it already overran already. But I hope that it has given enough insights and ideas for you to go out there and start looking at this space and formulating something for yourself. Alright guys, thank you so much for watching and we'll see you in the next video.